Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, Mention and other fine folks, to the Someday Dispatch of the Black Letter, where we contemplate thoughts worth thinking. And there's a bunch of thoughts that we've got on the agenda for today. As you know, with the Black Letter here, we think about things of how to try and make a better life for ourselves under the current circumstances. The current circumstances, of course, are quite unusual, where we find ourselves in the upside down. What makes sense is nonsensical, and what is nonsensical is seemingly making sense to a lot of folks anyway. We're trying to cut through that to get to the truth of the matter, how we can find a life worth living, save for a better future for ourselves, our family and friends. So let's get to it. Today we've got a bunch of things on the agenda. We're going to talk about cryptocurrency, we're going to talk about Batman, also precious metals, as you can tell, and history. History is going to be intertwined in all these things because, as it has been said on Battlestar Galactica, which comes from the Bible, I believe, something to the effect that all of this has happened before and all of this will happen again. And from history we can learn about the future. It's perhaps our best guidepost towards a future. And from that we can make decisions that can benefit us in the long run, hopefully. First up is an update on the new silver supply is drying up faster than Death Valley. The structural decline in new supply for the silver market has strengthened. It is not temporary and can't be easily resolved or reversed. The main issue is the deterioration in mine production. This is important because much of the bullion you and I buy comes from newly mined silver. And as you know, if you've been buying any gold, and especially silver, which is what I'm focusing on at the moment because I believe it's more undervalued than gold currently, plus it's cheaper. It's easy for me to come up with $20 or so for a silver coin than it is for almost $2,000 for a gold coin. But if you've been buying some silver lately, you know that the spreads between the spot and what you can buy it for are substantial. I think 25-30% at the moment. But obviously there is a short supply. Mine production fell for the fourth consecutive year in 2019. This was before the pandemic. Most estimates that this article has seen are for silver mine output to drop by at least 10% in 2020. And you know what happens when there's a shortage of supply in anything really, right? It's the capital markets, and when they're working properly and not being manipulated like they are now, the price will increase until supply starts to increase, right? It's a teeter-totter, if you will, a balancing on that fulcrum between demand and supply. For as long as records have been kept on silver mine output, we've never seen a 4-year drop this severe. And you can see here, 17, it was down almost 60 million ounces. So you can see that there hasn't been a lot of new silver being produced. It's largely the result of declining grades at existing projects, a lack of new discoveries, and very few new mines coming online. So here's the mine production from the top 10 largest silver producing countries. You can see since about 2016, it's sort of been on a slight decrease. The 10 largest silver countries have produced 12% less silver since 2016, as we can see. Annual additions to silver mine capacity from development projects has also been steadily falling. This is the amount of silver produced last year from new primary silver operations, and that was less than 6 million ounces, as you can see here. That's just about 6 million, little less. Byproduct producers of silver will invest less in mines as well, and these are producers of silver who are actually mining for other things such as copper, gold, zinc, and others, right? But won't they produce more silver if the silver price rises? And the article goes on to argue here that not really, because silver is not their primary source of revenue as discussed. It's usually it's usually copper or zinc or gold or other things. Most silver from byproduct producers offsets the costs for their primary metals. This means that as many as 4 out of 5 companies that produce silver will not automatically try to produce more silver if the silver price rises. And here's the secondary silver supply and bullion inventories. Because of low silver prices, recycling has fallen as well. And here is the secondary supply source, which is scrap and recycled silver. Still pretty high, but as you can see, not as high as it was leading up to the 2010s. And here's the amount of bullion silver available at exchanges, dealers, funds, and government inventories. Gold, silver, bullion inventories is roughly at about a 1.1 year of supply. Ticked up a little bit as interest is starting to come into the market for silver, but you can see the inventories are at pretty much, other than in the 2005 to, let's say, 2010 level at historic lows. CPM says bullion demand will grow 16% this year. It was up 12% last year, and prices were mostly flat. Imagine what happens to demand when silver flies past $20, then $30, $40. And if silver hits a new all-time high above 50, something we fully expect to happen, it will make global headlines and draw investors in like the proverbial moth to a flame. Silver hit its all-time high of $50 some time ago, probably been, I want to say 14 years ago or so. And we'll see. The silver price is just too low to solve the mine supply dilemma, which is part of the problem. So what will happen? The bottom line is that the low silver price has caught up to the industry and is in essence holding it hostage. Miners have been spending less and less looking for new deposits. They're developing fewer and fewer new assets. Existing reserves and resources are depleting, and it'll take lots of time and lots of money to turn it all around. There's little doubt that new supply of silver will tighten further, of course, until demand starts to pick up and the prices rise, at which point we'll start to see new production online. But these things lag, right? It'll take probably a year or more until silver supply starts to really ramp up. Okay, let's have a look at the silver ratio here. You can see still quite high, 98.1. You can see this is pretty much an all-time high, practically. I shouldn't say an all-time high, but at a high that's near the all-time high. You can see since roughly 2000, it's never been this high, which means that silver has greater opportunity. Okay, let's have a look at the silver price. Let's see how far back this will go. Okay, so it goes back all the way. You can see, it was in 2011 that silver reached its all-time high of almost $50. So it's about 9 years ago. Could be 10 years before we see a new price again. So I think, for me personally, I'm finding this exciting. I think silver is an opportunity to start getting into right now. I mean, there's low supply, as we've seen. The prices are relatively low compared to where it's been at an all-time high. And it has no counterparty risk, which means there's nobody's debt, right? You own the silver. There's nothing that can happen to you for it. Okay, some interesting news here from CoinDesk. PayPal, Venmo to roll out crypto buying and selling. So I know you guys have probably seen this, but it's just another indication that cryptocurrencies are starting to really take off and get into the mainstream. And this is huge because the fintech giant PayPal plans to roll out direct sales of cryptocurrency to its 325 million users. Can you imagine that? I think currently there's perhaps maybe less than 100 million people that own some cryptocurrency. It's a number I'm drawing basically out of my ear, but I think it's based on something I heard or read around that. So an additional 325 million users, I'll take that all day. So the person who has inside knowledge apparently said, my understanding is that they are going to allow buys and sells of crypto directly from PayPal and Venmo. They're going to have some sort of a built-in wallet functionality so you can store it there. It's unclear how or which or how many cryptocurrencies will be available, but the service is expected or could be expected in the next 3 months or maybe sooner. So good news there. As you can see here, let's refresh this. Bitcoin, doing well. It's coming up a little bit. Ethereum as well. XRP. So still good times to buy. At least I think so. And I'm going to continue to dollar cost average in a little bit. Okay, we're going to spend a bit of time with this article because this is really, really interesting. Now, of course, it's from Matterhorn Asset Management, who's a big gold bull, but nevertheless, it's more about history, and so it's important we spend some time on this. This is a fantastic article. The link is below, of course, as with all things. It's very important, I think, to read this if you're interested in where we're at, where we're going, and how we can best perhaps prepare ourselves. At least I'm finding it quite interesting. History tells us to own gold when central banks run out of control, and the argument here is that central banks have run out of control. Extraordinary popular delusions and the madness of crowds happen with regular intervals, as Charles Mackay wrote about it. It seems that the world experiences more delusions and madness than truth and sanity. Government's prime objective is to be re-elected by buying votes. Most leaders, whether they are kings or presidents, all have fear of failure combined with illusions of grandeur. As the economy peaks and the good times come to an end, they know that the best chance of not being ejected is for the good times to continue. And how can they buy votes when the economy is turning down and the coffers are empty? Easy. You just print money out of thin air, and we're seeing that happen. What folks don't understand perhaps is that prices don't go up, it's the value of the currency that goes down. Initially, when a country prints money to extend the prosperity, nobody notices that it is fake. After all, they are still called dollars or pounds, but gradually things become more expensive. This latest panic started in August 2019, and I think it had an issue to do with the repo market. I don't know that much about that particularly, but that's sort of, a short-term market where banks amongst themselves can offer low loans at different yields for brief periods of time. It goes on to say here, the current crisis started its acute phase back in August 2019. That's when the Fed and the ECB started to panic. I considered the central bank's panic statements and actions back in August as an extremely critical moment and as important as Nixon closing the gold window in August 1971. And folks, that's really where all of this debacle started, right? This is when all the manipulation was unleashed. The horsemen from this sort of monetary apocalypse, if you will, they were unleashed on August of 1971. It became so easy for central banks then to print money without any concern that it's pegged to anything of real value, right? And that's the problem. The end game is starting. The US and the world are now entering the end of 50 years destruction of the world economy and the financial system. The US has all the ingredients that led to the destruction of an empire: deficits, debts, excessive military spending, debasement of the currency, breakdown of trade, plague, the collapse of law and order, and riots. We've seen all those things, right? Two things are missing to complete the picture, namely wars and hyperinflation. Sadly, both these factors are likely to occur in the coming years. I hope not, but you never know, the way that we continue to rattle sabers with the Chinese and perhaps the Russians to some degree. 1971 marked the beginning of the end of the US empire, and I agree with that. Like all empires, the US had the seeds of its own destruction within it. This is how they achieved it. Firstly, spend more than you earn and print. Since the early 1960s. Every single year since that time, US federal debt has increased. In 1971, the federal debt was $400 billion, and today it's $26 trillion. That's a 65 times explosion in just less than 50 years. I produced the debt chart below. The first time and at the end of 2017, when Trump was elected president, I forecast then that the US debt would reach $28 trillion by 2021 and double by 2025 to $40 trillion. And this fellow is not far off, right? Since 1981, US federal debt has on average doubled every 8 years. The US debt is now at $26 trillion and is likely to reach more than $28 trillion by the end of the calendar year and $40 trillion by 2025. The projections of the Congressional Budget Office and the Committee for a Responsible Federal Budget also confirm that these debt levels are not unlikely. Secondly, you also have to import more than you export. Since 1974, the US has had a balance of trade deficit every year. In this century, it has been running between 20 and 65 billion monthly and is currently running at 50 billion. You can see that here, right? Roughly 50 billion. Then make the currency worthless. No fiat currency has survived in history. There have been periods when various currencies were backed by gold and silver, including the US dollar, as we know. And this stops governments from spending what they haven't got. And of course, once you get off the gold standard, it's a party like it's nobody's business, right? Which is what has happened, and we've seen that. With deficits and debts rising fast, the US would have run out of gold, and Nixon had no intention to balance the budget by cutting expenses. Much easier than to close the gold window and open the printing press, which he did on 15th of August 1971. And that was the beginning of the end of the US empire and the global currency system. He unleashed the Four Horsemen of the monetary apocalypse, right? Or the currency apocalypse. And those Four Horsemen, could we name them? Let's see. Well, let's say is the president, for sure. The Treasury Secretary, the central bank, Jerome Powell, what's his name? He's chairman, I guess. That's three of them, and there's got to be a fourth. Let's maybe that's BlackRock currently, right? Who's doing the devil's dirty work. Since 1971, the dollar and all major currencies have fallen 97 to 99% in real terms. In real terms means measured in gold, which is the only stable currency in history. And you can see that the currency rate to the bottom, from 99% in the UK, the best producing is the Swiss franc at 90%. It's lost 90% of its value. And that's why, arguably, the Swiss franc is often seen as a safe haven as well, for a currency at least, in times of crisis. Then you also have to manipulate all markets. The US government and the Fed have skillfully intervened in all financial markets, be it stocks, bonds, interest rate currencies, derivatives, or gold and silver. And they've intervened in gold and silver markets as well. But that's for another day. The result of this is that there is no real markets today and no real prices. And that's true. You can't value companies properly, right? There's no price discovery. If we just look at interest rates, it is a perfect example of false markets, right? You can see here, over 40 years, 10-year Treasury rate is down from 16% to zero, pretty much, whilst debt grows to infinity, as we see here, right? Debt now at 26 trillion. In a market governed by supply and demand, the gap between interest and debt in the chart above would not exist. Since they can create an unlimited supply of fake money, they can simultaneously set the cost of this money at zero. And as the money is worth nothing, it is self-evident that it should cost nothing to borrow. In the market, stocks are growing the normal high volatility before the next crash, stocks are showing the normal high volatility before the next crash, which is imminent. The coming secular bear market will shock the world. In the next few years, the world will learn that the printing of money can never create prosperity. This is the time when the masses will turn to gold and silver. At that point, there will be virtually no physical precious metals to buy at any price. History tells us that it is imperative to own gold when central banks run out of control. Folks, I urge you to read this article. It's very well done. And I think it gives you an idea of where things have happened before and how they are likely to continue to happen in the future and in the current paradigm we find ourselves in, the upside down, the topsy-turvy. So it's very interesting. I'm not one of those, as I said, I'm not particularly a gold bug. I just find the precious metals at this time in the economic cycle or in our social situation is probably one of the better assets to own currently, for me only, and this is not advice. But as we'll see, you can't discover proper price action for the stock market. Here, Sven Henrik on Twitter is showing a chart here. It's different this time. It's worse, much worse. So the chart, the S&P 500 is now more concentrated in the 5 largest stocks than ever. So in 2020, Microsoft, Apple, Amazon, Alphabet, Facebook are worth this much as a percentage of the S&P 500 market cap. And back at the big dot-com bubble, they only reached, 2/3 of that amount. And that's when Microsoft, GE, Cisco, Intel, and Walmart were there. So folks, I'm not a doomsayer necessarily. I don't want to get into conspiracy theories, but I'm not suggesting that it's the end of the world is nigh, but I think we are in for a lot of painful experiences to come over the next handful of years, 18 months to 3 years perhaps, until we get a real piece of runway we can take off again from. In the meantime, it's going to be challenging, and I can only see the best approach as being in saving money, paying down debt, perhaps stocking up a little bit of food because there might be some supply shocks. And other than that, investing and saving some money you can. And for me, I see the precious metals market and cryptocurrencies as the only markets where real price discovery is available currently. Something for fun. I'm old enough to remember when Michael Keaton was Batman. In fact, I still think he's the best Batman that I've had in my lifetime, or that I've enjoyed, I should say, rather, who's been playing Batman. So I'd love to see him play Batman again. He played Batman in the 1990s in the Tim Burton film. And down here they're saying that, Keaton famously played Gotham's vigilante in Tim Burton's Batman from the 1990s. And here he could play on a more senior, more older and wiser Batman. Regardless, I loved Michael Keaton as Batman. Let me know in the comments who your favorite Batman has been so far. I mean, Christian Bale was terrific too. George Clooney, not so much. Okay, on to the Magic 8 Ball. The question I have for the 8 Ball today is, will Michael Keaton play Batman again? That article from The Verge was speculation at this stage, but let's see what the 8 Ball thinks. Yes, definitely. Well, that brings me great joy. As I said, I liked Michael Keaton as Batman. And anyway, folks, thanks so much for joining me again. I appreciate you, and I appreciate you spending the time out of your day just to listen to this random internet dude rambling on in Babylon. I'm trying to find my way here and to make sense of the topsy-turvy we're in, the upside down, and I hope I can share some thoughts with you. Please feel free to share some thoughts with me that you think are important as we work our way through this current disaster. And in the meantime, remember always, dum spiro, spero.